Danny, who wants to lead off? Let's with what's going on with Alphabet. It gets up about 4% right now, the opposite of the rest of the tech world and most stocks. And again, since that September 2nd peak, the stock's actually kind of held up a little bit. What's happening?
Yeah, I'll jump in on this one. So really, we just, again, this is a theme we've been talking about all week long as advertising companies report earnings, but they're just people underestimated the rebound that happened here in advertising revenue. Advertising revenue, or total revenue, which a huge portion of that is advertising from Alphabet, was up 14% year over year in the just ended quarter. And then that was an acceleration from a 2% decline in the prior quarter. And so I think this is just continues to take people by surprise. And what we're seeing is just more interest in moving ad budgets to digital areas, which of course makes sense. This digital acceleration we've seen. And one of the things about digital is ad revenue can just be turned off and turned back on so quickly. So when it is turned off, it can hurt pretty badly, as we saw earlier this year. And when it's turned back on, it could ramp up. So I think the move makes sense. And then just zooming out quickly on all three of these, these down moves from Apple and Amazon, they're totally, investors should just plan for these in your portfolio. They're very healthy to have declines. It doesn't feel like it when you watch your money fall, but they really are healthy to make sure that if we had stocks just running up high, all the time, then the market just wouldn't work. So, but yeah, happy to cover these. But Alphabet, I think, kind of deserves this upside here. Just an amazing company.
Well, it's the one that if you think about 2020, a clear investing thing that has happened is tech stocks have done incredibly well as a category, even though the tech sector is still down 12 or 15% from that September peak. The S&P 500 tech sector stocks have gone up like 21%, right? That's far better than the market. You think about Amazon, it's up 64%, Apple's up 45%. So that's even with these sell-offs. Those stocks are still up that amount. Alphabet has basically performed with the S&P 500. It's the one that has done by far the least best because of its model, right? Because it's right. Tied to ad revenue, so it's really tied to what's going on with the economy. So that's kind of the big picture. The big picture on that. Let's see, Danny Vena, any extra thoughts to add on that?
No, I agree with what Daniel said. There's been an unexpectedly strong rebound in digital advertising. And it's important to remember that, Google is by far the largest digital advertiser in the United States, but in the world. Digital advertising essentially just got shut down, like Daniel said, when COVID hit, because marketing executives started thinking, where are we going to save money on our balance sheet, on our income statement? And what they did was they went straight to cutting the marketing advertising budgets. So there was a quick rebound on that. I think that explains Google's move. And since Google has not participated in the tech rally like you talked about it, I think this is just tied directly to that rebound.